We're still talking about high probability strategies, and these strategies can always be employed on the stocks market, the forex market, commodities, almost any kind of market, because the Elliott Waves Theory is a leading indicator as compared to other momentum indicators that are lagging indicators. So this tends to tell us where the market is going to move. You realize that in the previous video I predicted the move of the market and then it went in that direction. So today we are going to take a look at some of the trades I took and made profit based on my knowledge, because the edge you have, as said by a friend, is the knowledge. The edge you have over the average trader is the knowledge that you have that they don't have. So without too much talk, let's look at the current market and how I took trades to end in profit. I did a little scalping with minimum risk, minimal capital exposure. As I said, high probability trading strategies always come with minimal capital exposure. So if I go to H1, I took my trades based on H1 movement, and I went for buys on the step index because I saw wave 1, I saw wave 2, I saw wave 3, I saw wave 4, and then I entered a buy for wave 5. So by me spotting the Elliott waves, which almost always happens in the market because this seems to obey all the tenets I spoke about, you realize that the first tenet said that wave 2 does not go beyond the start of wave 1. Wave 3 is the longest trend, and then wave 4 does not enter the price territory of wave 1. So this is the price territory. Wave 4 does not enter the price territory of wave 1. So immediately I went for a buy when it turned, and I got some $15 for free, right? Just by having this knowledge. So someone go for a sell because the market is selling, guess what? It turns, and then you close in a loss. So that's how it's going to work for you if you don't have the knowledge, if you don't have the edge. So today I want to take a look at compound constructions and wave extensions. My name is Danny Legend, and welcome to Boom and Crash Expert Advisor. So on this whiteboard, let's do a quick recap. We have wave 1, 2, 3, 4, 5. Right, so wave 1 goes here. This is actually obeying all the tenets, because wave 2 doesn't get to at the beginning of wave 1, wave 4 doesn't enter the price territory of wave 1, and wave 3 seems to be the strongest. For compound constructions, that is such that we have wave 1, 2, 3, 4, 5, then we have the correction A, B, C, then we have another 1, 2, 3, 4, 5, then we have a correction A, B, C, we have 1, 2, 3, 4, 5, then we have a correction A, B, C. So I'll quickly label them 5, A, B, C, 1, 2, 3, 4, 5, A, B, C, 1, 2, 3, 4, 5, A, B, and C. So we have 3 of our 5 wave patterns. So I'll divide this section. So you have 5 wave pattern here. We have 5 wave pattern here. Then another 5 wave pattern here. So this actually continues for the simple, the basic 5 wave pattern. But if you want to look at the compound, it actually tells us that from here, from the start of wave 1 to 5, it's actually wave 1 of the bigger 5 wave pattern. Then 5 to C, this is wave 2. Then we have wave 3. Then we have wave 4. And we have wave 5. So the compound construction actually tells us that on the stock market or the forex market, commodities whatsoever, indices, volatility, step, boom and crash, it's telling us that we can have smaller 5 wave patterns being absorbed by a bigger 5 wave pattern. So we should always be on the lookout. Even though we are seeing smaller ones, we should also be aware that bigger ones are forming. It's just like dealing with M1, M5, H1, H4 and all that. That's how it works. It's the smaller time frame under the larger time frame So that is what is happening with the Elliott waves as well. Okay, so kindly take note of that. And then third of all, we have wave extensions, which I said I was going to talk about. Wave extensions are such that you can have the first wave extension, you can have the third wave extension, then we can have the fifth wave extension. What this does is, for the first wave, you could have something like this. I'll divide this way. For the first wave, you could have smaller waves, then you have a wave 2, wave 3, wave 4, wave 5. So on the market, usually if you are following the Elliott Waves theory, you would find that the one has smaller ups and downs. It has higher highs and higher lows, or lower highs and higher lows, depending on the bullish or the bearish nature. But they have so many little extensions, and then there's a wave 2 which doesn't go beyond the start of wave 1. It will still follow the three tenets we talked about, but then the extension happens on the first wave. Then for the third one, we have wave 1 and wave 2 intact, but then we have smaller waves this way forming a third one, then you have a fourth one, and you have a fifth one. So wave 3 has been extended by smaller waves. Do you see that? And for the fifth wave, we have everything intact until we get to the fifth one, which does this before you see a bearish 10. Do you see that? So 5 has been extended. So when you look at the market carefully, you should find extensions on the market. Let's see whether we can find any. From here, as we spotted our first wave, you can find the second, and you find that the third is a series of extensions. As you see that the fourth one, which is almost forming here, has broken the tenet, so it's likely considered as an extension instead of a wave 4, because it's entered the price territory of wave 1. So this, as you see here, is an extension of what? Wave 3, because you see smaller waves within it until there is an actual break or a change in momentum that reveals wave 4. So this is very simple. We've covered the current market and how I took trades. We talked about compound constructions and then wave extensions. So I hope you learned something. Let me know in the comment box how this is helping you, how you've used this, and also let me know on the Telegram page in the discussion group. I'll drop the link below this video so we know how you are advancing with what you're learning on this channel. Thanks so much for watching. Like this video and share. I'll see you in the next video. Bye.